Thank you, everyone, for being here. So today is Tuesday, November 12th. This is the first briefing of the Finance Committee for the year, and I appreciate everyone being here. We have some folks out of town, but when you do things off session, you just never know that you're going to reach everyone. I'm happy to welcome our new Insurance Commissioner, Marie Grant, who we all know and we've worked with, and we really appreciate you and look forward to your time as our Insurance Commissioner. So, Marie, if you'd like to start your presentation.
Thank you so much, Madam Chair, committee members. Really great to see you and look forward to working with you in this new role. We're going to be presenting, so I'm joined at the table by Joy Hatchett, our Associate Commissioner for Consumer Education and Advocacy, and Jamie Sexton, our Associate Commissioner for External Affairs and Policy Initiatives. And so we have a briefing today on property and casualty insurance for you. We're going to talk about some of the basic principles as well as trends that we are seeing in both the what we call the personal passenger automobile market, but what you think of as just car insurance, the car insurance that we all have. Homeowners insurance. We'll give an update on the deer strike study that we undertook, as well as some issues that we're seeing in coverage in the Eastern Shore with mobile and manufactured homes. All right, and this is our formal agenda, which I just went through. Okay, so just a little bit of background. What is the Maryland Insurance Administration? What do we do? We are an independent agency that regulates insurance in our state. So we license insurers as well as what we call insurance producers or agents or brokers. We examine the business practices of our licensees to ensure compliance with Maryland law. We monitor the solvency of insurers, and this is really one of the most important things that we do. Insurance is essentially a contract and a protection, and we need to make sure that insurers can pay out claims in the event of incidents. We review and approve insurance policies and forms. We review insurance rates, and this is a standard for property and casualty, where we'll really be focusing today to ensure that rates are not inadequate, excessive, or unfairly discriminatory. And then we also investigate consumer and provider complaints and allegations of fraud in the insurance market. So some of the consumer complaints that we end up investigating can be things like improperly denying or delaying payment all or portions of a claim, improperly terminating insurance policy, raising insurance premiums without proper notice, making false statements in connection with the sale of insurance or processing of insurance claims, and overcharging for services, including premium finance charges. So we're going to talk a little bit today, just level setting on the principles of rate making behind property and casualty insurance as some background. So these are some of the common terms we use. Premium is the price that a policyholder is obligated to pay for insurance provided under a policy that's purchased. Premium is calculated using the rates and rating rules filed by the insurer with the MIA. Rates reflect estimates of future costs, including relevant historic experience. And generally, rates are applied and premium is calculated at the time that the policy is issued. Essentially, usually it's often a guess or a projection, a very educated guess or projection before the costs that will be associated with that policy are known. However, the auto insurance premium for a policyholder enrolled in a telematics program may be adjusted based on actual information about their driving behaviors, and we're starting to see some of those programs enter the market here in Maryland. So here are some other general terms that we often use in this context. Losses, these are claims that to be paid by the insurer in the future. Loss expenses, claim-specific and claims operations. Underwriting expenses, which are related to acquiring and servicing business. And so those can include things like general business and operating expenses, producer commissions and fees to help with the sale of insurance, other acquisition of insurance expenses like marketing, premium taxes and regulatory fees and expenses that insurers have to pay. The MIA is a self-funded agency, and so the costs of our regulation are paid for by the entities that we license. The cost of reinsurance and any dividends. Underwriting profit goal is the operating income in excess of operating expenses, and that takes into account capital adequacy and surplus. So I think, as you all are probably hearing, and certainly as we're seeing in the complaints that the MIA receives, projected costs for both car insurance and homeowners insurance, these insurers are increasing. And one of the ways that we are seeing this show up in the filings that we have are indicated rate changes in our rate filings versus proposed rate changes. So when carriers file the rate filings with the MIA, they show both an indicated rate, what is the difference between the current rate level and the indicated rate level that the actuaries have projected is necessary to achieve a balance between income and losses, and then their proposed rate change that they're filing with us. And generally, the indicated rate is much higher than the proposed rate. A couple of more insurance terms. A non-renewal occurs when a policy expires and is not renewed. A cancellation is something that occurs when a policy is terminated before its expiration date. And so in general, in the property and casualty world, an insurer may not cancel a personal insurance policy midterm unless it meets certain conditions that are specified in law. So that would be that there exists a material misrepresentation or fraud in connection with the application policy or presentation of a claim. There exists a matter or issue related to the risk that constitutes a threat to public safety. There exists a change in the condition of the risk that results in an increase in the hazard that's being insured against. Non-payment of premium. In the case of homeowners insurance due to a conviction for arson, or in the case of private passenger auto insurance due to the revocation or suspension of the driver's license or motor vehicle registration of the named insurer or covered driver for reasons relating to the driving record. So insurers selling property, casualty, surety, mortgage guarantee, or title insurance in the state, they have to file all of their rules, all of their rating plans, and their rating rules with the Maryland Insurance Administration. And again, the bar for what that rate must look like is that they can't be inadequate, they can't be excessive, or they can't be unfairly discriminatory. The rates also have to be actuarially justified, that is, adequately supported by the data reviewed by the insurer. So a couple more terms important to know about rate filing in the property and casualty world. So for rates, there's two types of rates that we see before the MIA. One is prior approval. That is, the rate gets filed with us, and the carrier can't use that rate in the market until we approve it. That's generally the standard for life and health. Health in particular, I know something that you all are very familiar with. But in property and casualty, generally the standard is file and use. That is, once the carrier files the rates with us, generally they can use them without prior approval. We can request more information if needed to support the rate change. And then the MIA generally may not disapprove the rates submitted as excessive unless we have determined after hearing that the market for that line of insurance is not competitive. And this is the standard for most of the types of insurance in the property and casualty world. All right, so I'm gonna turn it over now to Associate Commissioner Hatchett to go through our next slides.
Thank you, Commissioner. So, as you all know, there's a lot of data in both our auto and homeowners insurance. And what the National Association of Insurance Commissioners has been trying to do since 2002 is to assist the states collect that data. Because if each individual state tried to do it on their own, it would be an overwhelming task. So we rely on something called MCAS. And basically, MCAS collects data based on claims, underwriting, lawsuits, and complaint data. And then states can reach out to MCAS to get that data. Now, that data, when it's reported to us, we can't release it because of proprietary information on a company-by-company basis. We release it in aggregate. But right now, we have 126 automobile insurance companies that report that data and 116 homeowners companies. Now, you may think that's not many companies. Well, remember that many of the, what I call them, the mother companies, have small companies underneath them. So for Allstate, it's all of the Allstate entities. For State Farm, it's all of the State Farm entities. So think of it that just because the numbers may seem a little bit small, we're getting information on a lot, most of the major players. And that helps us to provide you with information so that you can make decisions on policy decisions on legislations and things of that nature. Now, one of the things that we have been doing as we monitor the MCAS data is we have information that tells us the percentage and the number of automobile claims and automobile complaints that are existing. And as you can see from the slide, there's been a steady increase in those cases. And I'm sure, as the commissioner indicated, you've noticed that from your consumers that have been reaching out to you. But that also tells us that it's not something that's specific to Maryland. It is an overwhelming national issue. And specifically, the claims volume has increased. And what we'll see over the last few years, last 3 years, there has been a steady increase. And as there's a steady increase in the number of claims, of course, the number of complaints that our department sees has also increased.
So as Joy mentioned, we're sure that you're hearing from your constituents concerns about rising insurance premiums. And as she also mentioned, we do want to emphasize that this is not just a Maryland issue, this is a national trend. But you've probably also seen some varying stats as far as how Maryland compares nationally. We've also seen those varying stats. We have done some outreach to those sources, and it really just boils down to some slightly different methodologies. But at the end of the day, what all of this comes down to, despite these discrepancies, what we know is that Maryland's minimum liability and full coverage premiums are higher than the national average, and there are a variety of factors that play into that, some of which we're going to briefly touch on here. First up are infrastructure considerations. As you can see here on this slide, Maryland is the 7th most densely populated state in the country. We also have the 2nd longest commute compared to other states, and 73% of Marylanders commuted by car in 2022. You're also going to notice here our C rating for overall infrastructure and roads. Now, I do want to, as we're getting into these stats, I do want to emphasize that we're not making any statements as to how much or how little weight any particular carrier is putting on any of these factors. We just want to provide you with a broad overview. So just want to give that slight disclaimer as we're getting into these. Next up, we're going to talk about uninsured motorists. This is a topic that is often discussed in tandem with private passenger auto rates. As you can see here, Maryland has been ranked as the 17th highest state in percentage of uninsured motorists. This is a much higher percentage than the stat reported by the MVA, which you may have seen by nature of the subject matter that you guys typically deal with. This is just due to a calculation difference. MVA bases their calculation on the percentage of registered vehicles that are uninsured instead of the percentage of uninsured drivers. So just wanted to touch on that in case you've seen differing statistics out there, because we do know that those are out there. So it's just a slightly different methodology. You're also going to see noted here on this slide a Virginia law change that took effect in July of this year, eliminating the ability for individuals who register their vehicle in Virginia from paying an uninsured motor vehicle fee instead of obtaining insurance. This change, we feel, is helping disincentivize workarounds for maintaining coverage in Maryland, which is obviously, in our opinion, a very good change. It's also important to highlight that on July 1st of this year, a Maryland change took place, which Maryland's uninsured driver penalty increased for the first time in over 30 years. This means that the average annual premium for a policy with the minimum required coverage in our state is now less than the maximum annual uninsured driver penalty. In the same vein of disincentivizing workarounds for maintaining adequate coverage in our state, this is a very good policy change, so kudos to all of you in this room who supported that. And on to slide 17, another factor impacting premiums are increases to insurers' financial responsibility. As some of you may be aware, this year the MIA issued a bulletin regarding diminished value claims, requiring insurers to pay these types of claims through uninsured or underinsured motorist coverage when the at-fault driver doesn't have adequate coverage or they're unknown. You also see another example here in the form of a legislative action, which converted enhanced underinsured motorist coverage from an opt-in to an opt-out coverage option, which passed in 2023. I'm sure most of you on this committee are familiar with that piece of legislation that passed here recently. These are just a few examples of things that are increasing insurers' financial responsibility and therefore could be contributing to rising premiums in our state. We're now going to get into the issue of vehicle and repair costs, which I think is always of interest when we start talking about insurance claims. You'll see here that Maryland is actually slightly below the national average when it comes to the cost of used cars. However, you also see that Maryland was actually the third most expensive state for car repairs. There are a variety of factors that contribute to that, referenced in the bullet point you see here on the slide, including Maryland's high median incomes, rough roads, and inflation. But it's important to note that repair costs increased nationwide almost 20% from 2022 to 2023, which again emphasizes that Maryland is simply following the national trend. Lastly, we'd be remiss not to touch on auto thefts. You'll see here on this slide, we're not going to talk through all of these stats, but various stats of where Maryland and certain regions of our state rank in terms of auto thefts. But it all boils down to Maryland is a bit above the national average in terms of these thefts. I'm now going to turn it back over to Commissioner Grant to talk about a study that MIA was tasked with this year related to auto premiums.
Great, thank you. So before we leave auto insurance, just wanted to highlight that certainly affordability, accessibility, and affordability of auto insurance is a significant concern for us at the MIA and is something we're monitoring closely. I don't think, as Associate Commissioner Sexton went through, there's not easy answers here, right? Like these are the premiums tend to reflect big infrastructure challenges that we have here in Maryland, but certainly we're committed to looking at ways that we can address affordability.
Commissioner Grant, before we go to the next section, I just want to see if there's any questions from the committee. Senator Guile.
Thank you, Madam Chair. Thank you for this. Just one quick question regarding your analysis of certain factors that have maybe caused an increase of rates. Have you ever looked at, or is there any data on tort caps and the impact on auto rates, for example, or other?
So I know in the past that we've looked, because the committee has asked us to, but how recently, I'm not sure if we've done that kind of a review in the last couple of years.
Not since I've been with the agency, so it would have been several years ago at this point, but we can certainly circle back and see what we found then and share that, and if that's something that the committee is interested in us exploring again, we could see what we could do on that.
Okay, and that was several years ago. Was not only auto rates, but also was that like commercial type policies too, or if you know?
I don't know. We can definitely find out.
Okay.
I'm
Thank you.
thinking it was just PPA, but I'm not sure, and so I don't want to guess.
Okay, thank you. Thank you, Madam Chair.
I think this has come up in the
Thank you, Senator
context
Cowell.
of medical malpractice.
I'm not sure who was next, but I'm going to go down the road. Senator Reedy?
Thank you, Madam Chair. There's a study undergoing about the uninsured motorist, or the underinsured, not uninsured, underinsured motorist that's due back to us in 2026, I believe. Is that something the department's already in? That was part of the legislation in 2023. Is that something that has started yet, or?
It has not started yet, but it is very much on our radar.
Because it just went into effect, the law did, so you're
Correct.
gonna, okay, all right. And then looking at the factors, is really interesting factors that may impact private automobile insurance rates. Yeah, we've got a lot of commuting in the state. As I look at this, what you've got quoted here from the Society of Civil Engineers about roadway capacity continuing to lag in meeting travel demand, does that indicate that a lack of road capacity, you're saying these are factors that may impact private insurance for automobile insurance rates? Is that something that, I know you're not making policy prescriptions, but is that something that plays a significant role? Is our ability to move traffic through quickly? And don't let your answer be influenced by the fact that it took me much longer to get here in the middle of the day than it's getting harder and harder to get around the Baltimore area. So, yeah. Thank you, Madam Chair. I'll hang up and listen off the air.
So I don't know if we know the percentile of how much a carrier takes that into account. We'd have to do a much deeper dive. The purpose of this is to tell you all the different things that they might, and different carriers are going to take into account different factors, and the percentage of that factor is going to differ from the carrier. So I can't say across the board, this is going to play in. If we did something to increase our road capability, that would mean a 10% decrease in rates. I don't even know if we could make that type of analysis.
Senator Ellis?
Okay, thank you, Madam Chair. And thank you, Commissioners. I appreciate the information. A couple of quick questions. And several times in your briefing on insurance rates, you talked about watching for rates that's unfairly discriminatory. Those are two negative words. So, I mean, is there a rate that might be discriminatory but fair?
So that's a great question. I'm gonna also do you want to answer that?
So, if a person has more tickets, you might say that that person is being discriminated against because they have more tickets. That we would determine has a legitimate basis for an insurance carrier to take into account. So there are some things that are appropriate for the carrier to take into account.
Okay. Yeah, well, thank you for that. That was kind of
Can
out
I
there,
add?
kind of wonky, but go ahead.
Thanks,
Commissioner.
Senator Ellis. If I may just add, so there are things that, yes, certain behaviors that may have an actuarial basis, but we also have a lot of protections in the insurance article to make sure that there is not that unfair discrimination based on any number of factors, and that's something we keep
Okay.
an eye out for closely.
Thank you for that. And one last quick question. Are they, talking about insurance companies reporting data to that agency, I forgot the name of it. Are there some that don't report, choose not to report? Is it totally voluntary?
That I know that not all of them report. Now, I can tell you that specifically our surplus lines carriers don't report because the states don't have jurisdiction. And I think that it's actually based on the amount that they write. Give me 1 second.
How much?
So there's a threshold that the carriers that must actually have a threshold of $50,000 in the auto and homeowners in order to report.
Okay.
But I don't want to say that every carrier does report, because there may be some that are outliers that for whatever reason don't report, and what action has been taken against them, don't know.
Okay. Yeah, thank you. Okay, thank you, Madam Chair.
Thank you, Senator. And Senator Mounts?
Thank you, Madam Chair, and I'd have a question, but first I want to thank you, Madam Chair, because in the briefing, I know we didn't really go over it, but the study on the effects of wildlife or wild animal collisions is a very hot topic in my district. And even though the study didn't go through, I want to thank MIA for conducting that study, because that's very helpful. It
No,
comes up.
we did get it through on another bill. We did.
Okay.
And we're going to get to that. It's coming up. We're going to have more questions on that, Senator.
okay. Well, maybe-
It is a
maybe-
hot topic, though, I agree.
Yeah, maybe hopefully I'm not out of turn, but I'm interested. This is very helpful to me. But do we have data, or is there a source for data to do a compare and contrast for Maryland versus Delaware, Maryland versus PA, Maryland versus DC, and Maryland versus Virginia? Where would I go? Where would someone in my shoes look to find that type of information? In particular, I suppose the rates are going to be reflective on. No, they're not. They're not reflective on where you drive. It's the amount that you drive. So, so I guess it would just be just to do a compare and contrast with, our rates versus neighboring states' rates, and to see if there's some things that may be, apparent in differences in policy that would impact rates. That type of analysis.
Senator Motz, that's definitely something we can talk with you about. I think that we could we have great relationships with our fellow state regulators, and also, access to data through the National Association of Insurance Commissioners. So we can definitely work with you to frame up the comparison that you're looking for. I think there's two things probably. There's the underlying rates themselves, but then the rates of increases that we're seeing over the past several years.
Absolutely.
Yeah.
Absolutely. That would be very helpful. Yeah. Thank you.
Thank you, Senator. Senator Lamb?
Thank you. A question for you about whether you can, illuminate us on how often AI is used in insurance premium setting and how that affects the market as well.
So that is a great question. AI, I think, is this committee is probably well aware of. There's a lot of exciting things happening in AI, and a lot of exploration, I think, of the private industry in ways that we can use AI. But there is also, I think, appropriately concerned by regulators and wanting to make sure that we understand and are able to appropriately regulate. We did put out a bulletin this spring about our views on AI and the need for people to be behind those policies. I don't know that we have the answer to your question about how often it happens in Maryland, but certainly it's something I'm really interested in understanding better and making sure that our consumers are protected, that we're advancing technology where appropriate, but that we're also protecting consumers and making sure there's fair regulation of these companies.
So we don't actually have a sense of how often AI is used in setting insurance premiums, for example.
In the property?
I don't think we have. It's something that, as the commissioner indicated, we are looking at, and we know through the National Association of Insurance Commissioners, we are also getting that information. But I don't think sitting here today, we can give you an answer to that.
Do you think that's something that are going to try to find out or know?
Yeah,
or how?
Absolutely.
Okay.
Oh, yeah.
Obviously would urge the commission to, or the administration to come back if you need additional tools to make sure that you can properly regulate AI use.
Absolutely.
Okay.
Thank you, Senator. Seeing no other questions, let's talk about wild animals.
So I'm not going to name any names, but this is timely as we had an incident of a staff member this morning. Certainly an issue. So our folks did take a look at this issue over the summer and a few findings that we'll share with you. We sent a survey to 73 companies, comprising about 95% of the auto insurance market. So it was a pretty comprehensive survey, and requested things like policy counts, claims data, and information about underwriting and rating practices for the past 3 years relating to wild animal collisions. We also had a virtual public hearing on this back in August of this year. So a couple of, it's interesting. I think overall, we haven't seen an increase necessarily in wild animal collisions. And in fact, it may be declining. That's what information from the Highway Loss Data Institute tells us. It also tells us that perhaps corresponding with personal experience, this month is the month with the most wild animal collisions generally, and the month with the fewest is in August. And so we actually, I'm jumping ahead a little bit, but we did put out a consumer advisory recently, which is really important given the time of year it is. So here's some of the data from the survey that we put out. Almost 90% of policyholders in Maryland do have comprehensive coverage, which really hasn't changed over the past 3 calendar years. And there's no, the number of claims for collisions with wildlife has roughly held constant. We're not seeing any changes in trend there. There was a little tick up in 2022 and then back down in 23. Only 7 of the 73 companies that we surveyed applied surcharges due to a claim for a collision with deer or other wildlife during the survey period, but one of these companies has since ceased the practice. And then none of the companies that we surveyed would remove a discount specifically for a collision with wildlife. However, 15 of 73 companies surveyed do consider the overall number of claims or the dollar amount of claims under comprehensive coverage, which might include collisions with wildlife, to determine qualification for a safe driver or a loss-free discount. And though the number of collisions we've seen has roughly held constant, similar to other claims and other trends in the auto insurance market, the cost per claim is increasing. So back in 21, it was about $4,800. Last year in 23, the most recent year that we have full year data, it was almost $6,200. So here's some conclusions I think that we can draw from the examination. Certainly collisions with wildlife, and particularly deer, do account for significant losses to drivers' insurance, and they do impact comprehensive insurance premium rates because of the costs of the claims filed. But it was difficult for us to quantify the extent to which premium increases are attributable specifically to wildlife collisions. Because we're also seeing increases that are due to vehicle theft, claims, all the general trends we just talked about, right? So it's difficult to tease out specifically the wildlife portion. And we've also seen, as we noted, repair costs like parts and labor for claims have sharply increased in recent years. So again, we did issue an advisory, a consumer advisory last week about deer collisions. They do peak during the fall breeding season, which we're in right now, right in the middle of it. And that also that comprehensive coverage is optional coverage that pays for damage to vehicles resulting from animal strikes. And our consumer advisory also provides MDOT, state highways tips for reducing the odds of a deer collision. So with that, happy to answer any questions about that study specifically before we move on.
Thank you, Madam Commissioner, for the study. I guess it came down to like only 7 companies are charging.
Yeah.
And they're not removing discounts.
Yeah.
But if they're, I guess if it's a second accident is when they're charging, or?
Yeah, we can get the information specifically about that.
It seems interesting that only 7 companies
Yeah.
are charging. So, maybe the public needs to ask that question when they're purchasing insurance.
Yeah.
Are you charging? Because it does happen frequently.
Yes,
I do
absolutely.
want to thank you for the advisory. We did post it and send it out. And, I have to be careful driving in my own driveway every night because they're roaming around. So we need to be careful. Is your question on the wild animal? Center mount? Okay, because I have another question before we move on to homeowners, but center mounts, go ahead. I
don't want to interrupt.
Yeah, I'm not on the wild animal. I'm going to back
Okay.
up on something else.
Get into the, thank you, Madam Chair. Just a quick follow-up. On the surveys, were there any, I'm sorry, I've got to work on my articulation. I just came off the Eastern Shore. I'm going to say this awkwardly. I apologize. Just prepare yourself, everyone. Are any insurance companies that received the survey, did any of them say that they were not keeping data on wild animal collisions?
I do not believe so,
So
but let
they-
me confirm.
They all
let me
collect
confirm
that data?
Yeah.
Okay. And so the numbers I'm trying to get the right page. So those statistics that you showed, I mean, are those hard numbers that are scientific? Those were pretty accurate. I mean, you said out of the survey, how many of the providers responded to the survey out of the?
I think most, if not all, it encompassed about 95% of the market.
Okay.
So it's a really comprehensive picture of the mail-in
So then it would
market.
be, those are pretty reliable
Yeah.
numbers to say at least, well, I'm trying to get the right page. So it would be safe to say in 2021, there was over 31,000.
Yep.
22, over 32,000 recorded
absolutely.
by insurance companies. So that's very helpful to know. I just wanted to clarify. I didn't know how accurate the data that you received, how accurate that was.
Yeah.
Yeah, and they didn't break out the different wild animal collisions. I assume the majority are probably deer, but they're,
It's funny that you asked that, Senator. I was actually just going to offer, we have received a request for a little bit more of a granular breakdown in terms of zip codes and types of animal collisions. So we're working on pulling that together. By nature of when we received that request, that data is not going to be finalized in time for inclusion in the formal report. However, that was not requested in the formal charges for the report, but we have promised the legislator who requested that information that we would have that by early December. And so our team is already working to pull that together, and we're happy to share that with you as well.
okay. Thank you very much.
Thank you, Senator. I'm sitting here thinking, what other wild animal could do this kind of damage to a vehicle? Certainly not a squirrel or a rabbit or
In Western Maryland, we understand that there are instances of bear.
the bear. Thank you. Senator Kramer?
Snipes. Senator Mounts knows all about snipe hunting. Madam Chair, I know, if I recall correctly, our good friend Senator Bailey was the one who brought this to the committee's attention, and I know that he's going to be very pleased with the fact that a study was done. My recollection from that bill hearing was that Senator Bailey was actually sitting at a traffic light in his truck when a deer ran into his vehicle. In light of the fact that 7, now 6, companies actually offer a surcharge, what is your opinion with regard to legislative action that would prohibit this surcharge by any company in the state where you have wildlife that take matters into their own hands? I mean, I understand Senator Bailey was wearing that blaze orange hunting hat while he was sitting at that traffic light. and the deer saw that and it was payback time. But what are your thoughts with regard to the prospect of legislation like that? Can you opine as to what your opinion is?
Thank you, Senator Kramer. I think, of course, we look at every bill as it comes to us, right? And have to make that determination once we see the bill. But you know, I think anytime we talk about getting rid of a rating factor in car insurance, what the balance of what we look at is how that risk then gets spread across the rest of the market. So it really does end up being a policy call. The risk doesn't go away related to the claims. It's really just a factor of how that risk gets allocated across the
Well,
market.
it appears that the overwhelming majority of insurers have figured out a way to allocate that risk since,
Yeah.
again, it's just a very small handful
Right.
that are doing that. Thank you. Madam Chair, one other question I just have to ask. Is Matt Celentano signed up in opposition to the MIA briefing today? There you go, Matt. I know you are. Thank you, Madam Chair.
Thank you, Senator. I wanted to back up just a minute if there are no other questions. Oh, Senator Ellis, go ahead.
Yeah, a really quick question, Madam Chair. Okay, thank you. So talking about risk pool, okay, certain policies are spread out across the state, I do believe, like homeowners policy. Is that correct?
Yes.
Okay.
Yeah.
And certain are more regional, county-like automobile policies.
Right. It depends on the carrier and where they're insuring and all of that, but yes.
Yeah. Are there laws that say what can and cannot be done as far as the pool with a statewide versus, say, a countywide?
I'm not sure there are in property and casualty. Yeah.
I think we probably should get back. 'cause
Yeah,
I'm
yeah.
not thinking of any, but there may very well be. I'm right off the top of my head, I'm not thinking of any.
Yeah.
If you could, yeah. Get back
Yeah,
to
we
me
can
with
get
that.
back to you on that.
Thank you, Madam Chair.
Thank you, Senator. If there are no other questions about wild animal strikes, I missed something on page 17 where you talked about, we had the bill in 2023 that changed underinsured motors and enhanced uninsured motors from an opt-in offering to an opt-out. Do we have any statistics yet on how that has changed the market? Are people opting out?
We don't have any statistics on that just yet. You'll have to forgive me, I do not recall exactly what was included in the charge for the study that we're tasked with. It's due in 2026. I suspect that there would be something along those lines that's required to be included there. We have not begun that study just yet, but we can certainly look into what may be easily pullable for us at this point in time, and we can certainly share that.
And did anything change on the renewals, or did the renewals just stay the way a policyholder had made their early decision? Like, when your policy comes up for renewal, do you have to go back and opt in?
We think it was just new policies, but
Just
we
new
can
pol-
certainly check back and make sure that our recollection is accurate.
I think that's what I remember, but I just wanted to double check. Thank you.
Thank you for asking. We'll circle back one way or the other.
Thank you. All right. If there are no other questions, we're going to move on to homeowners, I think.
Yes. I'll turn back to Associate Commissioner Hatchett.
So one of the other things I'm certain that you've been hearing from your constituents is that they are finding it sometimes more difficult to find homeowners insurance. And what we refer to that at the MIA is the hardening of the market. Essentially, it's become either more expensive or just even more difficult to find coverage in the homeowners market. And the way there's several indicators that tell us that. As you can see from the slide, that new policies written have decreased approximately 6% from 2021 to 2023. Non-renewals have increased from 2021 to 2023. Also, there has been changes in the number of cancellations. All of those are indicators to us, and we, as an agency, pay close attention to those indicators. And you can look at the next slide, which tells you the percentage of policies that remain in force and also the policies that are now have been canceled for one reason or another. Bottom line here, it has been getting more difficult and more expensive for Marylanders to find homeowners insurance. That said, once again, this is a national trend. And there are many factors that play into this. The next slide will tell you a little bit about what we have been starting to do to get to the bottom of this. We've started a market conduct study, which we've gone out to the insurers to get data, to give us more information as to the actual causes for this hardening market. At this point, we can tell you, based on the information that we have, most of the insurers did give us responses to the survey. Two of the companies that we wrote out to indicated that they did not write any new business, and one respondent indicated that they weren't writing any, they were no longer writing homeowners insurance. Now, that said, I mean, it doesn't sound very positive. That said, there are still places for homeowners to find homeowners insurance. I'm not saying it's at a price that they would like to pay, but there is still a market for our Marylanders to find policies. One of the other things that we're tracking, and it's probably a little too soon to tell for sure, but the market seems to some degree to be improving. So as opposed to the line for rate increases to be going steadily up, it seems like we're seeing some of the carriers not having as significant rate increases as they were, but we're going to need more time to make sure that that's the current trend. The other thing that is something that I think all of us can do, because one of the driving factors is claims, and we need to try to better educate our consumers here in Maryland to maintain their homes, and that their insurance isn't a maintenance policy, that they need to do things like maintaining their roof, cleaning their gutters, because then that will assist the decrease in the number of claims that are filed, and even if a claim is filed, possibly the damage and the amount that's paid out will be lesser. One of the other big things that we need to, companies, and this sort of goes back to your point, Senator Ellis, companies are permitted to use underwriting guidelines when they're underwriting and insuring certain risks, and consumers just need to be better educated about those underwriting guidelines so that they can make informed decisions. And that also will allow them to properly find policies that can meet their needs, but also that they can afford. Because that's one of the big barriers / hurdles that we frequently find. And lastly, this goes through some of the underwriting guidelines and some of the things that we have been seeing. And one of the primary things that we've been seeing recently, carriers, the tightening of, one of the ways that they've tightened the market is their treatment of roofs. When most of you, because I've been at this for a long time and most of you have as well, a roof was a roof was a roof. And if you had damage to your roof, the insurance company was going to come in and it was going to give you a new roof. Over time, companies have restricted appropriately, basically telling consumers, if your roof is 30 years old, we're not going to replace and give you a new roof. Or if there's only damage to a portion of your roof, we're not going to pay for your entire roof. And that's going to be within the company's underwriting guidelines. So it's a matter of consumers understanding what companies can and cannot consider when they are paying claims. And that will help them make informed decisions and also help them when they're shopping for insurance. And we would invite you, any of you, if you would like information to share with your constituents, I'm off script, I know. Please come to us to help educate your constituents so that they can make better informed decisions about this core piece that may help them bring those premiums down.
Right, thank you, Joy. Not off script. I guess let me pause there. That was a lot of information, Madam Chair, and before we turn to some of what we're seeing on the Eastern Shore, I don't know if...
Thank you. That was going to be my line of questioning next, but some states have passed regulation that if a company pulls out of the homeowners market, they can't write anything in the state. In other words, they lose the right to write auto. That happened in Florida. It happened in New Jersey. I wonder if we've ever considered that when a company says we're no longer writing homeowners.
I don't know for sure. I don't think we've considered it, just because as a general rule, we want companies to write business. And the fear is they would probably, a lot of the larger companies would look at their books of business and see if it's makes financial sense. Doesn't mean that we can't look at it, but I don't recall us ever looking at that.
Okay, thank you.
Thank you, and Joy, and thank you, Madam Chair. That is something that we can look at, if look at other state practices there, if the committee would like us to. All right, so I think as we touched on and talked about in that last survey that we did, we are hearing specifically about decreasing availability of coverage for mobile and manufactured homes in Worcester County and Ocean City. We've been hearing from consumers and elected officials that have expressed concern that very few admitted carriers write homeowners insurance policies for these homes at all. And that we're also seeing surplus lines carriers limiting coverage for homes that are over a certain age, in particular over 20 and 25 years old. So we did hold a fact-finding hearing virtually a few weeks ago, back on October 23rd, to gather information concerning the scope of the issue. We heard from consumers in Ocean City about some of the concerns, from brokers who are concerned about the availability of coverage. We also, Delegate Hartman joined, as well as staff for Senator Carrozza and Mayor Meehan of Ocean City. We also heard Windsor Mountjoy also attended the hearing, their property and casualty insurer. And we also heard from representatives of the Maryland Joint Insurance Administration. That's our FAIR plan, sort of our insurer of last resort in the homeowner space. I think the good news is we are working closely with the JIA to see if there are policies that they may be able to write to help out consumers who are unable to find coverage. And so we'll give you an update on that likely before session. The record for the hearing just closed, and we're reviewing and again working closely with the JIA. But I think, and this is, I think, a particular situation affecting certain communities, but is also potentially an indicator of the hardening of the market that we are seeing statewide. So again, these are not, though we're closely monitoring it, certainly statewide issues, but these are also national issues. I don't think we are seeing the same types of unavailability of coverage as some other states that we're hearing about, for example, Florida, that have faced a lot of storms, but it's something we're really closely keeping an eye on. And then just our last few slides, just we have a bunch of information on our website for consumers and for your constituents that can be helpful. They're really helpful guides and easy to understand, again, on all aspects of property and casualty insurance. FAQs about auto insurance premiums, comparison rate guides, all of that is available on our website, and the links are in your materials. And then you know how to find us, hopefully, but we are always happy to help you or your constituents. We do have a great rapid response program on the healthcare side. We have a new health coverage assistance program to help with any kinds of health coverage questions. So we are here for you and to help out your constituents. And with that, happy to answer any questions.
Senator Kramer?
Madam Chair, pardon me, can all the residents of the state assume that as a consequence of what we've been seeing with regard to the disasters caused, and I realize some of my colleagues think that the climate crisis is fictitious, but can we assume that with the consequences of the destruction we're seeing from, the wildfires and the hurricanes and the much increased destruction from during hurricane season, that everybody's premiums are going to be going up in the homeowners insurance market, assuming they can find homeowners insurance?
Yeah, so I think so that's a great question, Senator Kramer. I do think I think as we talked about, the good news is we do have availability in our state. We are seeing indicators that perhaps some of the increases, at least in the past several years, were leveling off. But yes, insurers look at their risk, and when they are seeing big storm events like fires, like hurricanes, they do update their risk models accordingly. I think another issue that we are seeing and hearing about from our insurers is the cost of reinsurance. So it's not just the insurance itself, but then the companies that provide the backstop for the insurance, that's the reinsurance, and they are saying that they are seeing those costs coming up. So I do think in general, these big weather events and these climate concerns do help contribute to increasing premiums over time.
And going back to the issue of our coastal areas in the state, I know back when I was on Economic Matters in the House, there were issues at that point in time with regard to companies pulling out of the state with regard to insuring our coastal areas. What is this beyond mobile homes? What is the general prospect at the moment with regard to insurers and competing in that marketplace?
And I recall as well when we had the issue with companies pulling out, what we are seeing more of is not pulling out, but not writing within a certain amount of feet from the coastline. So companies may still write business, but they don't have the appetite to write business in areas that have an increased risk, which makes it more and more difficult for those people that live within that amount of miles or feet from the coastline. And I can tell you that when several years ago, when Commissioner Goldsmith was in office, we did a big study. And while the affordability was an issue, availability was not deemed to be a major issue because we then could still rely on the surplus lines market. That's something that we are beginning to look closer at to see if, in fact, the surplus lines market is still going to be writing within the coastline.
And how do you find that? How do you track it, and how do you know what the trends are? Hopefully,
Beforehand.
before it becomes time to panic. Is there any way to have a handle on where that trend is going?
We can try, but quite honestly, I mean, obviously, with the surplus lines market, it's a bit different because we don't regulate it. So we get some information from them, but we can't get as much. But we have to do things like the hearing that we just had, talk to the brokers, and see whether or not they are experiencing, because basically where you're going to see it first is in the market itself. It's not something that's going to occur overnight. You keep talking to your broker community and say, are you having more difficulty or less difficulty? So having those open listening sessions that like the commissioner just had.
Are you aware of any states at all that have ever created that backup marketplace for homeowners insurance the way they do for auto insurance?
Are you referring to things that they do in Florida?
I know, I honestly don't know. Is Florida doing that now?
Yes.
Is that,
Yeah.
that's what they've had to do?
Yeah.
And it's not working that well.
It's not?
No,
Okay.
no.
And Florida's the only state that is
They're
doing that at this
different.
point?
Other states that have the same types of weather events have tried different alternatives. And we can do a deeper dive. South Carolina has something. Either Mississippi but those states have tried something, and with mixed success.
Yeah.
Okay. Thank you very much. Thank you, Madam Chair.
Some states require a wind policy, a flood policy, and a homeowner's policy, for example. I think that was North or South Carolina.
Yeah,
It had a separate wind policy. I think Texas, it could get worse.
And consumers, you will hear some consumers, and the studies have shown that these consumers are paying more for insurance than the value of the home, and so they're going bare. And it's just tough.
Madam Chair, if I may, and Senator Kramer, just, and we can look into some of those other states, but I also do just want to emphasize to your question about how do we know beforehand. One of the things that I am taking a hard look at and working with our team on is I do think we need to have a better understanding of what is happening in the market and those signals and be ahead of the curve to your point. So that is something that I think right now our tools are, I think, as Associate Commissioner Hatchett described, what they are, but I want to get us to a place, and I'm actively looking at how we can get to that place and talking to other states to make sure that we really understand what's going on in our market.
Thank you, Madam Commissioner. Senator Washington.
Thank you, Madam Chair, and thank you for being here, and thank the staff and the committee chair for hosting this great briefing. Been looking forward to being here with you guys and hearing this presentation. You know, I'm probably just being late. I have to work full time, so I was in a work meeting. But I was on page 13, the private passenger automobile insurance data. I saw a lot of data in here about why some of these our claims, our insurance have been increasing for automobile insurance in the state. One of the things that I don't see in here, and I think that all these might be true, but one thing I don't see in here is, the effects of geography, like where do you live in a state when you have a higher premium versus other people that live in a state for auto insurance. Sometimes what zip code you live in determine your rates, your increase of a rate, whether you move from one zip code in your county to literally the next zip code over, it would increase or decrease based on where you live. And that's not factored in here either. And I wonder if you can speak to that and also speak to just demographics. Are low-income people paying more than, more richer people who have auto insurance? Like this document isn't speaking to that, which is a concern of many of my residents and constituents that see their premiums increase year by year, and they don't get in a car accident, but their premiums are just constantly increasing. And sometimes they don't drive many places, but their premiums still increase. So I wonder if you can speak to that and why that, speak to that for me if you can.
So, underwriting guidelines, and they're looking at within the zip code, your rates can increase not just because of what you do personally, whether you've had any accidents, but within that particular zip code, are there more accidents, more theft, more reasons for claims? Are claims payments for that particular area greater? So that doesn't have anything to do with you. That has everything to do with where you happen to live. And so insurance companies are permitted to, when it comes to factors, look at a area to see if they're paying more in claims. And if they are, then for that particular area, the insurance company is permitted to charge more in premium.
Does that concern you?
So, obviously, I would like everyone's premium to be less. On the other side of that, what, as a regulator, I want to make sure of is that the company has the financial wherewithal to pay claims when they need to. So it's a balancing. It's a balancing of making sure that the company doesn't go under. Because if they don't collect enough in premiums, then that company is not going to be there when they need to pay those claims. But of course, I'm concerned about the affordability. So it's a very difficult balance.
So balance the company's ability to pay their premiums versus pay their prices versus what a resident or a car owner has to pay. It kind of doesn't seem fair, because if I'm a homeowner, I'm moving, or I want to buy a new home, I move to an area, I have to budget myself, and I've been a great driver for 30 years, and now my premium just went up $300 in that area. So I can't afford to live there. And I'm asking you a particular question about, are you concerned by the use of the zip codes and not looking for another method to determine increases or rates? That's obviously one factor, but that's a significant factor to a lot of residents that move from place to place or are mobile, and they have to move apartment to apartment sometimes, and there's increases every single time. Is that a concern of yours?
Senator Washington, if you don't mind,
Sure.
I'd like to take this one, because I really appreciate the line of questioning and where you're coming from. I think at the end of the day, I think most folks here know that I come from a health background, right, where the ability to change rates in most of our markets is pretty limited, the factors that you can use. And so we're talking about property and casualty, and our state law does allow for really precise pinpointing of risk on what can be an actuarially justified basis. That all being said, I think we, as we as I work with the team and work with you all, I am concerned about some of the factors that are allowed for in the property and casualty market in rating, and definitely want to work with all of you as we think about affordability in this market, what the policy that we look at in terms of what is allowed in this market and what is not. But right now, under current Maryland law, these are things that are allowed.
Got it. Okay. I'll talk after, because I do.
Yeah.
I'm concerned by this, and this has been a serious issue for multiple years and decades.
Yeah.
And it just we hear from folks like you guys, and I haven't seen any recommendations yet to drive down costs yet, and so that would be good to hear and see. But let me talk about one other thing real quick, just really fast. There's a car insurance companies are using this car insurance tracking devices. Have you heard of those? So when you're in the car, and whether they use your phone or Tesla, they have it baked into their car, or they can monitor how you drive and where you go, how late you drive, how many times you press on the brake, how many times you speed, and based on that, they can increase your rate. And that is happening right now. And they even offer you some type of discount if they do allow it. And if you do allow it in your car, but then if you say no, then your rate increases. How are they able to do this to be able to track how you drive and increase your rates based on how you drive? Is that not a privacy concern that we're allowing in this state? What law permits them to be able to do that?
So so a couple of things, Senator. So first of all, I think the companies would probably say that this is to channel. Then I'm not saying I necessarily agree, but just want to give the counter argument for just a second.
You can start with the pro argument, though.
Let's start with the pro argument then. I think we need to make sure that these programs are the disclosures around them, around the use, around what they can be used for, about how your rates can be increased or canceled based on participation in these programs.
Correct.
I think that absolutely needs to be really clearly disclosed to consumers who enroll, and that consumers understand what they are getting into when they enter these programs. I do think that for some consumers there may be a benefit, but the disclosures, to your point, and like the understanding of what's happening, that's the pro argument, and I absolutely agree with you there. I think it is an option for consumers, and I think in a age of rising auto rates, I think the companies in some cases have framed this as like a potential benefit to reward good drivers, and so to be able to like more accurately capture that risk that we were talking about. But yes, at the end of the day, I do think the disclosures around how these programs are enrolled and how the data is used is incredibly important.
The question is what law allows them to do this, to track? Is there a law?
If I can interrupt,
Yeah,
Senator Washington, we had a bill that allowed it,
Yeah.
and then we adjusted the bill
Yeah.
3 years ago that said they could also use it to increase rates. And I don't think that was, I don't think we actually realized. So what happens is you go to buy a policy and the agent says, if we put this telemetric in your car and you're a good driver, it's going to save you money. Well, everybody wants to save money. But then it changed that it could also increase your rate. So if you're not a good driver, if you're doing too many hard stops and going too fast to take off, now that can, not every company, but some companies use it to increase your rate. But it's not required. It's an option that the consumer can accept the telemetric to try to save money on their insurance.
Thank you, Madam Chair, for that clarification and update. I know I've been shopping around for a new auto insurance, so I know this personally, and some of them are not optional. Tesla is mandatory. Like if you have Tesla insurance, you have to have this monitoring system in there. There's no option not to have it. There's other companies that mandate it, and if you don't, then they'll charge you more money if you don't have it in your car. So for us to allow this and for us to have authorized it is just kind of concerning to me, to know that our residents and drivers in Maryland are being monitored this way. and their rates will increase based on some inaccuracy that could be within that app, just isn't fair to our consumers here in Maryland. So I look forward to having a lengthy conversation about this, but actually making some action happen, because our consumers should not have to be monitored. I don't know any other insurance. I don't know all the insurance because I'm new to this field, but it just seems odd to me and unfair. Thank you.
Look forward to discussing with you.
Senator
more.
Washington, I think I hear a bill coming. I don't see any other questions, but I'm going to, just two quick things. Are we going to continue to use the file and use method? Is that going to, at this point?
So the file and use method is what is specified under Maryland law for property and casualty. There are other states that have some different methods of that. Like for example, depending on the situation, if a filed increase by a property and casualty insurer is more than a certain amount, like 10%, then that would then flip it to be subject to prior approval. So current Maryland laws, file and use, definitely, as we're looking at the team and the capabilities, open to a discussion with you all about what makes sense for the future.
Thank you. And my other question was on the homeowner's insurance. If a policyholder needs to use JIA for their homeowner's insurance, does it now include liability, or does it still exclude liability?
JIA has, and I don't know everything about JIA, the primary issue that people on the Eastern Shore with the mobile homes are finding is that it's only actual cash value versus replacement cost.
Right.
And so for the mobile homes that are only frequently, an actual cash value is either $5,000 or $10,000, and they are trying to get a new or getting ready to purchase, and the lender is going to require $200,000. Lender's not going to go any place close to them. So that's where we found the real gap, is the ACV versus RCV.
But if you buy a JIA policy now, does it include liability, or do you need to purchase your liability separately?
I am not sure. I don't want to guess.
Can you check that for me?
Yes, absolutely.
Thank you. Do I have any other questions for the insurance commissioner and her team? Before we adjourn, I want to make sure that you have met our new analyst. We are very fortunate this year. We have brought on Lisa Tran. Lisa's here, even though her name tag's there. Lisa comes from 5 years of bill drafting and is very happy to be here. She was my intern in the House, but I did not hire Lisa. It was it's done by DLS, so we're very happy to have Lisa on board. And then it says Lisa Tran, but that's Amber Gunlock. And Amber also comes from DLS with years of fiscal note writing, particularly in health insurance.
The public health sector as well as cannabis.
So she'll be working on some of the cannabis and smoking regulation. And of course, Nathan McCurdy's back, and we appreciate Nathan coming back. And we'll also have Dave Smolsky back eventually. He hasn't signed his contract yet, but during session to help and mentor our two newest associates. So this is your team for this coming year. And Tammy, of course, we're delighted to have Tammy back. Yay, Tammy. If anyone would like to meet with me and talk about legislation that they're working on or that they're going to introduce, I'm happy to do that. Just give my office a call and we'll get it scheduled. Any other questions or anything for the good of the order? Nope. Thank you, Madam Commissioner, and thank you to your team.